Good day, I'm Dr. Chen Wen Chan, a chartered engineer, a chartered scientist, and a certified energy auditor. Today, I'm going to talk a little bit more about why gold is the enemy of the dollar in a multipolar world rather than yuan or renminbi. When the world gradually loses confidence in the US dollar as reserve currency, like any other previous reserve currencies that came before the US dollar, historically speaking, it is precious metals like gold that is the next best asset class for investors to reallocate their wealth into as an inflation hedge. When there is any wealth diversification into other currencies, it is not so much that the market trusts these currencies, but rather to gain access to the gold that these currencies should be able to provide. When investors buy gold, they have to sell their US dollar or other paper assets like US treasuries in order to obtain the dollar. By having more dollars, they would be able to sell these dollars to buy gold, meaning increasing the money supply of US dollars in the currency market, which devalues the dollar against other currencies and gold. Historically, gold-backed currencies were created whereby 25 to 40% of the total money issued by governments or central banks would be backed by gold. Or technically speaking, the money issued directly is considered as M0 money supply. If this M0 money supply is being loaned out to create even more money, this new money created by that is not considered as part of the M0 money supply. The history of the US dollar started with 40% of the M0 money supply issued by governments or central banks to be backed by gold. The current quantity of M0 money supply is close to 5.3 trillion US dollar. The US government herself is holding 8,134 tons of gold reserves in her central bank. And these gold reserves was last audited in 1953. If 40% of this M0 money supply has to be backed by gold, that would amount to 2.1 trillion US dollars. If we then divide 2.1 trillion US dollar by the amount of gold that is currently held by the US government, the price of gold would be around 7,400 US dollar per ounce of gold. Even at 25% of M0 money supply, the price of gold would be around 4,600 US dollar per ounce of gold. However, the current price of gold is around 2,000 US dollar per ounce. If we include highly liquid US treasuries, where risk-free rate remains valid throughout the lifetime of US treasuries, the price of gold would likely be even higher. As of March 2023, there was roughly 23.9 trillion US dollar worth of marketable US treasury securities that were outstanding. Again, if 25 to 40% of these dollars from treasuries are used to obtain more gold, the price of gold would reach a new high between 25,000 to 41,000 US dollar per ounce of gold. Just to reiterate, the current price of gold is 2,000 US dollar per ounce. Such a remuneration in the price of gold would wreak havoc in the conventional inflation expectation of the US dollar and the accelerated erosion of the confidence of the stability of US dollar as storeholder of wealth. The remuneration of gold hasn't even taken into account the offloading of other minor reserve currencies like the yen, euros, and pounds. Let's not also forget that they have their associated government bonds like the Japanese JGB the European Union's Eurobond, and the British gilt. If these are also included, the price of gold per ounce would be even higher than just 41,000 US dollar per ounce. So, what are the consequences of wealth moving away from the US dollar into gold? In the US, inflation will run rampant as the US dollars come rushing back from outside of the US into the US. But we also have to look into the consequences on the global south and BRICS when such event eventually occurs. Many analysts are correct to worry about the cost on the global south and BRICS to be able to service their US dollar denominated debt that is outside of the United States. What this means is that the rest of the world needs to sell their own currencies to be able to purchase US dollar to service the interest rate on those US dollar denominated debts outside of the US. The more of their own currencies that they need to sell to purchase the dollars, the weaker these currencies are relative to the dollar. To keep things in perspective, US dollar denominated debt outside of the US stands at 65 trillion US dollar, as indicated by the World Economic Forum. For the Global South and BRICS, the cost of buying US dollar goes up with increasing interest rate imposed by the Federal Reserve. However, it is unlikely that the current Fed funds rate can go up as high as what it used to be in the 1970s and early 1980s in the United States. The Fed would unlikely want to blow up the US banking system, as the current banking system is much more indebted than what it used to be in the 1970s and 1980s. This is because the Fed fears deflation in US asset prices from monetary policy more than it fears inflation. Deflation in monetary policy makes everyone feels poorer, even the rich. However, inflation in monetary policy benefits the top 1%. So someone can still actually win out of an inflation monetary policy. Therefore, based on the existing circumstances, it is unlikely that the interest rate imposed by the Fed would be much higher than 5 or even 6%. So long as relative to other currencies, the devaluation of the dollar through rapid inflation is at a faster pace than the ceiling of 4 to 5% Fed funds rate, the currencies of the Global South and BRICS can strengthen against the dollar. It will be easier then for the Global South and BRICS to service their own debts that are denominated in US dollar. However, what would give investors the confidence in the currencies of the Global South and BRICS? The confidence will be the amount of precious metals like gold that are being hoarded and stored by these central banks relative to their own government bonds and M0 money supply, at least when compared to existing incumbent reserve currencies. Thus, I believe it is a mistake that many people think that China wants people to trust their yuan or renminbi. It is not that investors trust yuan or renminbi, it is just that investors trust their gold more. So what are the factors that affect the probability of gold creating more volatility in the financial market in 2023? The first factor is that US military budget has increased by 9%. To avoid nuclear fallout from wars between nuclear powers like US, Russia, and China, inflation is an attack on the military capabilities without war-related human casualties. That's the first factor. The second factor is to shift the confidence in US dollar to gold to accelerate inflation within the US. that can be gained when BRICS announce a gold-backed trading currency within BRICS. Also, demand for gold is proportional to the volume of trades within BRICS. So new BRICS Plus member that can significantly move the volume of trade upwards will move the demand for gold upwards. The new members to be recruited have to be observed moving forth. The third factor is that OPEC Plus, especially UAE and Saudi, are both putting a floor to the price of oil, with all member states actually cooperating to reduce their production quota. A floor price is also an attack on the G7's monetary policy and by extension, their fiat banking system that is highly indebted. So what's the conclusion to this video? There is actually a concerted effort to push the price of precious metals like gold down through shorting using future contracts. It is highly unlikely that this concerted effort can suppress the price of precious metals much longer, especially once BRICS or BRICS Plus makes an announcement of a gold-backed trading currencies to be used multilaterally within BRICS or BRICS Plus. The demand for gold will be in excess of what short sellers can do, pushing up the price of gold to new highs while incurring huge losses on the short sellers. Technically, short sellers can be bailed out using the G7's fiat system, but that would require the G7 to print more money or incur more debt. Either way, it is bad management of debt and money printing, especially when economic growth in the G7 have been forecasted to be much more lethargic compared to positive growth coming out from BRICS and BRICS Plus. I post more frequent recent updates on LinkedIn and Medium, so feel free to follow me on either of those social media platforms. The links to those platforms are listed in the video below. Thank you. Have a good day.